So conditions, that is what I talk about in my every single video, and that is what save you from entering a wrong trade. So in trading, what we need to look at, we need to observe the market first, and then we need to look at the conditions. After that, we are ready for the entries, and then we set up our stops and target, which is really important because there are some traders, they do not enter, they enter the trade but they don't enter stops and target. These are the 4 factors you need to follow, guys. If you follow them, then trust me, the chance of becoming a profitable trader will increase dramatically. Now with that being said, let me quickly show you what I've said in my last video so that you can understand the conditions and mistakes to avoid. Push down, pull back, and we are getting a bearish engulfing candle, but look at the fact price is still within this previous low. This candle closes below right here, then we have a confirmation that the price is likely to retest again and fall back down to this level right below, which I've just mentioned. So be careful here, do not just enter long trade blindly here. I want to see a very strong bullish engulfing candle that fully engulfs the previous red candle or a 382 candle. Once that happens, only then I will be looking to enter my long trades. Nice one. As you can see, we were here on Oanda yesterday and the price was not broken below our box, and we do have a nice double bottom pattern right here with this green candle. And this green candle was a very aggressive way to enter double bottom, and premium members should know the way we enter the double bottom with a very aggressive entry. Now just ignore that here, I don't want to confuse you. Come back here on currency.com. So right here, as you can see, what do we have? I've clearly said in my last video, if we have a bullish engulfer or a 382 candle, then we have a bullish entry, and I will only enter my bullish trade if we have these 2 conditions. Now if you look at here, I did not enter my trade because this is not a 382 candle. In case you don't know what 382 candle is, so pull up your Fibonacci tool from swing low to swing high right here, and right here, as you can see, this red line is right on the body of this candle. So if we zoom this up right here, the body is above this right here, this green candle. That makes this an invalid 382 candle. For 382 candle to be valid, the 382 the body must be above the 382 retracement. And if you look here, this candle from the swing low to swing high right here, if you see, the body is way above my red line, making this a valid 382 retracement and 382 candle. So that was a perfect entry, another way of entering a double bottom trade. As you can see, this was a nice 382 candle, so making this a valid bullish entry. Now as I mentioned in my last video, that I will enter my sell trade if we have this candle closed below this previous low, and which did not happen. Now that is where the traders get confused, and that is what the FOMO comes. When the candle was trading here, the sellers start thinking that the market is likely to fall, and they start selling here without waiting how this candle will close. So that is why it is really important, these price action, they talk with us. There is no guessing game in the market. This candle clearly pushed back up in this rejection area, so that makes a sell invalid, and we were still in a buying zone because the price did not break and close below this box. If you are my priority member from last couple of weeks, then you know that with this double bottom we do have an RSI divergence. It's been a while since we take a double tops and double bottom entries in the priority group, but once we have, I will send that in a trade alert so that you will understand these entries properly. So that is the conditions I want to show you guys. Always wait for the candles to close. Once you have a candle close, only then look for the condition and enter your trade. In this case, this candle did not close below this low. That is why the market did not enter in a bearish territory. Now at this point the price is pushing up. Once this candle is closed above, we have a very likely chance that the price will hit 50 EMA. Now one more factor I want to clear here. When the market is in a downtrend and when the market hit these zones here, I've removed the zones because I want to redo the zones again. So what happened is, when the market is pushing down, there is a likely chance that price give us a little bounces and then start to push down and come back in this area of value, give us a little bounce that is enough to hit our target, and then continue to push down. But the way we enter the trade from these zones is with the bullish signals like this engulfers or a pin bar engulfers. If we have this signal, only then we enter the trade. Otherwise, let the price fall or rise until we have a good reason to enter. So at this point, the reason I'm saying that once the price hit 50 EMA, there will be a chance we get a bearish signal here again. Looking at the fact price is trading below in a downtrend. So keep an eye here. If you are in a trade, if you entered at this pin bar, ATR of this pin bar is 12. The target must have been hit. If you calculate here is 21. Keep an eye on 20 EMA. I will only enter my next long once the price break above 50 EMA. And what will happen then? If the price wants to keep pushing up in a trend, I will mark my neckline. Not my neckline. I will mark a neckline right here. And then what I'll do, I'll wait for the price to break above, come back, retest the neckline, and the price can possibly to rise from here and a possible change in uptrend. And we do have a gas storage report coming up shortly, so keep an eye there. Expect some volatility. So these are the conditions, guys. Market is likely to push up now, hit 50 EMA, and once we hit 50 EMA, if you are managing your trade, that is a good point to exit your trade and look for the next condition. If you have a break above 50 EMA, then look for this neckline and wait for the retest of this neckline, and we will enter another long. So at this point, gas is still bullish, not entering sell trade until the price completely broken below this previous low. Let's check gold. So gold is bullish and still pushing up. As mentioned yesterday, we have a hit of my 1618 retracement. This is also one of the strategy, but do not worry about that. Price did hit 1618 retracement and pulling back down. So we are still looking for bullish entries. Price can still pull back and still push up until price hit 1808, goes up to 1820. Once the price hit this level, we will enter our bearish trade with bearish engulfers, double tops, or a pin bars. So keep the zone here. We are still not selling until we are in this area right above. Let's check crude oil. Crude oil is now trading above 50 and 20 EMA. We do have a 20 EMA cross. At this point, we are still above all the EMAs. We can expect a pullback and continuation until the price hit this next major level of resistance, which is 81.32, goes up to 82.97. This is the zone from where we can expect a pullback, and that pullback will be enough to hit our sell target. So keep the zones here. Price is still pushing up, still bullish on 4-hour time frame, and expecting a price to hit my zone above. So that is it for commodities, guys. Any questions, any confusions, you can always buzz me on Instagram. I'll get back to ASAP. I hope you have an awesome weekend. See you guys in the next video. Till then, take care.